Ladies and gentlemen, this is Shelly Kraft coming to you live on SNNLive. We're at the Cambridge House Vancouver Resource Investment Conference 2014, and I think we have a village standoff. I have Brent Cook, Exploration Insights, Mickey Fulp, the Mercenary Geologist. Now let me ask you fellas, first of all, welcome back to SNNLive, both of you. Now here's the question. Are you going to agree on everything?
We agree on a lot because we have similar backgrounds. We have the ability to evaluate projects like not very many newsletter and analysts do because of our geological experience.
What do you think?
I don't know. I haven't heard what Mickey's thinking these days, so this is what I'm anxious to find out.
Okay, so let me throw a question out to you fellas, okay? This is a conference that brings together a multitude of different companies in the mining and resource space. There was 100 companies more or less here than there are today at the last conference. That's a contraction as far as I'm concerned. Is it a contraction for the better? Is it a contraction for the worse? Does it look like the industry is shrinking? Does it look like they're running out of money? Does it look like investors aren't throwing any money at them? What do you get as a sense of where we are today in the mining and exploration, in advanced exploration, in production, et cetera, et cetera? Brent, you tell me first.
The answer is D, all of the above. It's been tough, and we deserve what we're getting right now. I'm convinced of that, because the mining companies have let their costs just run way out of control, and so investors, intelligent investors who put money in, lost money not getting the margins they expected on the rising metal prices. On the exploration side, a lot of companies are spending a lot more money than should be spent on projects that from day one you could recognize weren't worth a damn. So those are the two things that, until that changes, I'm not that positive inclined towards this sector.
But isn't there pressure, and you can pick this up, isn't there pressure on these exploration companies, to drill? And isn't there pressure on them to produce a 43101 compliant report? I mean, do you really blame these guys for spending the money that they raise as long as it's not going into buying a Mercedes?
Well, they raise the money to spend them for exactly the things you've said, so it's obvious. I think the problem has been there have been too many juniors. We're saddled still with 1,600 of these companies. When we got 200 here, they're probably the cream of the crop. But there are just not enough good projects worldwide to support 1,600 companies. This business has to continue to contract until we are left with mainly the good companies who will go on and have new startup companies that will carry the torch. But until that happens, our business is not going to prosper, and that I'm convinced that's not going to happen this year.
Yeah, and that you made a really, really good point there, is the companies are expected to do these things. So while I just before blame the mining companies and the junior exploration companies, investors have just as much blame to take as well, because they're forcing these companies to do things that aren't, that don't make sense. Be it drill holes that shouldn't be drilled because, they said they would drill them or they thought this process was good, or you come out and you raise money on a prospect because X, Y, and Z's got to happen. If X, Y, Z doesn't happen, they're kind of forced to keep doing it. So the investors bear as much blame for this disaster as it's a three-way deal here.
So let me give you another question that you guys could answer. I'm focused on this thing about contraction. Doesn't it start from the barracks? Doesn't it start from the Newmonts when they're having billion-dollar write-offs per quarter? I mean, I don't, if this is who we're as juniors are depending on to be taken out or to sell their properties to, and they're liquidating, and they're taking everything they can out of the ground and liquidating properties and taking write-downs faster than Grant took Richmond. What can the juniors are getting hit from all sides if that's the case. You want to start, Brent?
No, you're right, and that is the problem. I think, I work with a number of funds, and these intelligent investors came into the sector on the thesis that the gold price had to rise, and so they bought the mining companies for the leverage that would offer, and they'd completely disappointed. Until the major mining companies fix that and show that they can actually make good money mining, serious investors are unlikely to look at the juniors.
Agreed. The real problem we have in this business started with the underperformance of the gold miners. They treated the mining industry as a growth industry, and it is not a growth industry in the usual New York Wall Street sense. This is a value industry. So they traded the quality of ounces produced, the high margin ounces, for the concept of producing more and more ounces, and that's come back and bit them until they write off all their bad acquisitions, all their bad assets, move those out of the balance sheet, and reduce their operating costs by raising cutoff grade and going for high margin ounces. That will not filter down to our little micro-cap business, and we will continue to suffer.
I got another thing I want to add. If we're looking at an industry, particularly in North America, when you talk about resources, you're talking gold, silver, copper, platinum. For the most part, there was no competition for the investor dollar because that was where you put your money into the resource industry. Now, with the advent of rare earth, you've got graphite, you've got various different kinds of competition for that same investor dollar. When they see that gold, a little less interesting, silver's a little less interesting, all of a sudden you have these new opportunities. How much money is really being taken away from the gold and silver juniors to go into some of these new ideas?
I'll take that, and I think I would say that the other commodities have given us a breath of life. This business really functions on the gold business, and not always will the gold business be a good one to speculate in terms of equities. I think what has really affected the gold part of this business more than other metals and other commodities to speculate in is all the money that goes, the money that in previous booms could only go into gold equities now goes into gold ETFs. And I think the gold ETF, although it stimulated the gold price, was not particularly good for speculators in gold stocks.
Your comment?
The gold ETF took a lot of money out of what might have otherwise be put into gold mining companies, but I've got no problem with the ETFs. The problem probably has really been that we've had too much money all at once coming into the junior sector. I mean, we've just been flooded with money, and as Mickey noted, realistically, there's probably, 100, 200 legitimate prospects out there scattered around the world that are worth putting your money into right now, at least in my view. And there's another 1,000 out there that don't stand a chance to start with. But when that much money flows in here, these guys can raise money on a project that, from the day one didn't stand a chance. So, we've really had too much money, or at least it hasn't been selective enough.
So let me summarize. In my opinion, there are some tremendous opportunities, whether they're in gold, silver, copper, if you're a good management team with good properties and you're funded. And the more close you are to producing, the better off you're going to be. That's number one. Number two, the breath of fresh air is keeping the life, which kept the life in the market during the downturn in some of the other resources, was the unknown elements, like rare earth elements that came, like potash even, that came into the market to stimulate investors. So with that said, what do you think, in general, 2014-15 have in store for the core gold, silver juniors? Mickey.
I think they're still going to struggle. The average company on the venture exchange, even the Toronto Stock Exchange, will not prosper, certainly in 2014. I am hopeful we will see a better 2014 than we saw 2013. I personally do not look for any bump in the gold price over the course of the year. In fact, I would expect the gold price to test the next time Yellen gets up and says we're going to taper a bit more. I expect another test of that $1,200 base in gold price. So look at it hopeful. I don't think it'll be as bad, but I don't think it's going to be robust by any stretch of imagination.
And Brent, your final comment?
I'm likewise, in my view, I think we're bouncing along a bottom. I don't know that we hit bottom. I don't know if that's the right word to use, but we're bouncing along. And until the major mining companies can demonstrate that they can make money, again, it's hard for me to see serious investors start putting money into this with the long-term expectations that it takes to really invest in junior exploration. You cannot invest in a company based on what the next drill hole is going to be. What you've got to do is invest in a junior company based on your thesis as to what might be there and evaluate each drill hole with respect to that thesis, either it's right or wrong, and stick with it or get out. So I think I agree with Mickey that on his view of what's happening. I don't see a catalyst for gold, and I think we both also agree the Broncos are going to take it this year.
Absolutely.
You guys are not football analysts. I just want to make sure I got the right industry. Let me give a couple of websites. These are a couple of brilliant guys in the industry that a lot of people go and buy their newsletters, go to their websites. So we've got Exploration Insights with an S. Insights.com. And we've got Mercenary Geologist.com. Right. I'm Shelly Kraft. This is SNNLive. We're at the Cambridge House Vancouver Resource Investment Conference 2014. Thank you both. This was fun.
Yeah, we should do it again.
I like it. Mick?
Thanks, Shelley.
Go
Always
Denver.
My pleasure.
Right?